Hello students, I would like to welcome you all to this video. Today our topic is double entry. So we will learn about the double entry. So let's start. The double entry is to record business financial transactions with the usage of dual effect, which means that every single transaction has in business has two effects. And to record the effects, we use debit and credit. So in simple words, we can say that debit and credit is the terms that we use to record the effects of business transactions. Now, what we need to debit and what we need to credit. For that, I would revise again the elements that we have in accounting. The number one are assets, the second one is liabilities, third one is capital, the fourth one is expenses, and the last one is income. So we will do debit once the asset increases, means the balance goes upward of the assets, and we will do credit once the assets balance decreases, means the figure goes downwards. So the next element we use the opposite, means we will do debit once the liabilities decreases, and we will do credit once the liabilities balance goes up. The capital is similar with the liabilities, means its decreases we record on a debit side, and once it goes up, increase, so we'll record on a credit side. Expenses are similar with the assets, so we record on a debit side once the balance goes up, and we record on a credit side once the balance goes down. Income, the last element, is similar with the liabilities and the capital, so we record on a debit side once its balance decreases, and on a credit side when it's increase. Now I would like to show you how to record these double entries in a format. So for that we need to make some entries. So let me write down some entries. For example, Mr. A started business by investing $10,000 into business bank account. The second entry that I'm going to write down here is that he purchased office furniture for $2,000, paying by check. The next entry is he withdraw some cash from bank account for office use. The amount was $500. The next entry is he purchased a computer, paying by cash for $300. So let's record these transactions by using the double entry. So with that, we need to make a format. The format will be, the first column that we need to make is for the date. The second column that we need to write down is details, and the third column that we need is for the amount that we will record as debit, and the last column, the fourth one, we need to make the amount, to record the amount of credit. So these are the four columns that we need. So let's record the first transaction. The first transaction was Mr. A started business by investing $10,000 into business bank account. So we need to find the two effects, as the double entry is based on that every single transaction has two effects. So one effect is the bank account. The bank is an asset. The second one is the investment from the owner, so that we mention with the capital. So the first one, or bank balance, is going to increase from the investment that we got from the owner. So the bank is going to be recorded as debit. So the debit entry, we start from this line. Let's suppose if the date was 1st of January 1999. So the bank account is going to be debited with the amount that we need to record in the first column is the $10,000. Now the second element that we identified from this transaction was the capital, and we know that if the capital increases, so we will record on a credit side. So that means now we have to do capital, and the credit entry we record by giving some space and the amount that we will write down on the credit column. And this is, we are done with our first entry. So now the next entry, let's suppose, was done on 2nd of January, and the entry was he purchased office fixture for $2,000 by check. So in this entry, the first element we got the furniture. That will be our asset, which means our assets are going to be increases. So we'll name the asset and we'll open the account with the name of the asset. And the second element is our bank account, because if we are going to make payment by check, our bank balance is going to be reduced. So we'll make a credit in our bank account. So the furniture amount will goes on the debit column, that will be $2,000, and the bank account amount will goes on a credit column, because we are going to make the bank account credit. So let's move on to the next transaction. The next transaction is he withdraw some cash from bank account for office use. In this entry, our bank balance is going to be reduced, which means the bank is going to be on a credit side, because our asset is going to be reduced, and we will record the amount in the credit column, and that is $500. On the other side, the second effect is our cash. We are going to get cash from bank account, so that is another asset. So asset of cash is going to be increases. So we'll make a cash account and we'll write down on a debit side. So that will be our third entry. Let's suppose it was done on the same date. Now let's move on to our last entry, and that was he purchased a computer paying by cash for $300. So in this transaction, our cash balance is going to be reduced, which means we will write down cash account on a credit side with the amount of $300. And on the same time, we got another asset, that is computer, is going to be increases. So we'll open a computer account and we will make it debit with the same amount. And this, let's suppose this transaction was done on 3rd of January. So this is the way we record our entries. The most important thing is to memorize this table, that assets are going to be increases, so we'll record on a debit side, and once they go down, so we'll record on a credit side. So liabilities are opposite than assets, then capital is similar with the liabilities. Expenses, they are similar with the assets, and income, that also again similar with the liabilities and capital. Thank you.